Market staging a strong rebound today after 3 straight days of losses, but with all the uncertainty hanging over investors, how should you navigate the moves? Our next guest has got 2 themes she's playing. Let's bring in Kane Anderson, Rudnick portfolio manager, and senior research analyst Julie Beal, a new face to the CNBC family. And Julie, one thing that you're looking at is fundamentals over forecasts. That makes a lot of sense. What's the backdrop that you're seeing right now?
So I think when we look at the global economy, there are just so many uncertainties that pop up every single day. And there are things that we couldn't have predicted far beyond that. I think we have all gotten very attached to our fancy Excel models and our dot plots and our forecasts. And frankly, I think you can throw them all out the window because it's just not possible to predict where things are going. Why not instead focus on being more of a business analyst and finding really strong, proven, durable business models? Because you can go back historically and see, hey, how has this company performed in a financial crisis? How has this company performed in an oil crisis? And when you do that, then you have a lot more certainty that they're going to be able to weather that.
Yeah, and we've seen sort of a comeuppance for a lot of the companies, and I'm thinking mostly the fintech space, that have not operated in any of those environments, and we're seeing it reflected in the stocks right now. Julie, I want to get to your picks here that you're bringing to us. Fair Isaac is the first one. What do you like about it?
I think with Fair Isaac, what's nice about this business is it's very durable, right? It does well in challenging economy, but it also has leverage to an improving economy as well. And the fact that if the economy is stronger than we expect, there are going to be more people pulling scores. So I like that there is a certain floor to that business. It has a certain enterprise focus and exposure as well. But it has earnings stability, and that's what I'm really trying to focus on here. So that's what I like about Fair Isaac. And then a company like Jack Henry, I would look at that business as one that's obviously exposed to financials, right? They provide software for small and mid-cap banks. If you look at that business through the financial crisis, it's like it didn't happen. That's the type of business that I think is really worth owning when you have this level of uncertainty.
So it sounds like you're really going for the more domestic plays, ones that are not as exposed to international headwinds.
I think there's a lot to be said for small being beautiful, right? Especially when we're talking about software names, ones that have kind of a specific niche that they've carved out and they're just attacking that market. There tends to be less competition. So we look for ones that have high barriers to entry. But generally speaking, I like software businesses that have a lot of recurring revenue, right? Because that allows them to plan ahead of time for their costs, and then their earnings have less variability.
Julie, great to speak with you. Thank you for your time. Appreciate it.
Thank you.
Would you go small, Guy? Small, I mean, if you think inflation, and we know inflation is here, I'm not going to say if you think inflation is here, but in general, small caps don't have as much of an ability to pass along price increases and deal with inflationary pressures as some of the larger cap stocks.
Listen, I don't know Isaac, Jack, or Henry, but I'll say this about Jack Henry. You look at their last quarter they reported a month or so ago. They have 25% operating margins, very good. 13% EPS growth. The one caveat is it trades around 32 times next year's numbers. But you know what? Maybe for a company like that, it's justified. So I'm never one to go small, but in this case, I will go small.
It's actually not that small, right? 12 or $13 billion. I agree. I was thinking, wow, at 30 times, it's kind of expensive. But if I look at it, the PE has been a lot higher than that. So it's not so expensive to itself. It may be relative to the market, but that one's sort of interesting to me.